All right. Well, good morning, everyone. We're going to get started here. Thank you all for joining this webinar. It's a very timely topic on financial forecasting and budgeting for small businesses. I know my team and I are starting to think about this now, and I'm sure many of you are as well. So we're very lucky to have two incredible experts with us from Plante Moran to share their expertise. So let's get started. Before we get too far, I wanted to share a few housekeeping items. First, you should see a little chat box that says Q&A at the bottom of your screen. So feel free to type your questions in there throughout the call. We'll be answering as we go, and we'll have time for more questions at the end. So please don't be shy. And also we'll be sharing this recording with everyone. So no need to take screenshots or notes. This will all be in your inbox very soon. So let's meet everyone. I will introduce myself first. Hi, everyone. I am Jessica Shamoon. I'm the president of Obsidian HR. We are a full service PEO based in Denver. And our mission is to help small business owners. We support them with payroll, HR, benefits, workers' comp, compliance, payroll taxes, you name it. We have a whole team of experts on the HR side, and we work really closely with our clients and with their CPAs. So I'm really excited to have Rebecca and Lyle here to share more with all of you about what they do and about this topic today. So Rebecca, let me pass over to you. Could you introduce yourself?
Yeah, absolutely. My pleasure. I'm Rebecca Kelley. I'm a partner with Plante Moran in our management consulting practice. So wanted to give you a little information about Plante Moran in case you aren't aware. But Plante Moran is one of the largest CPA firms in the nation. Where we were founded 100 years ago. So we're celebrating our 100-year anniversary this year, which is a really exciting thing for our firm, just to see the growth and see the expansion and the ways we've been able to support clients over that 100 years and providing guidance and support and consulting services and all of that as it relates to their businesses and what's important to them. We are in a few major geographics here in Colorado, Illinois, Michigan, as well as Ohio, and we have some international footprint as well. I encourage you to go out to our website to learn a little bit more about us and the services that we offer, really serving a lot of middle market clients and a lot of different industries, especially many that are key, at least here, in Colorado, but across those other geographics. And from a consulting perspective, just a wide breadth of consulting services as well as assurance and tax. So I'll turn it over to Lyle to talk a little bit more about our practice specifically.
Thanks, Rebecca. My name is Lyle Bauman. I'm a senior manager on Rebecca's team, and our focus is really on outsourced accounting for our clients. So our goal is to kind of come alongside our clients and partner with them as their accounting team. And we can scale our services to include kind of everything from an accounting perspective or focus in certain areas. Our primary areas of focus are really the controller and CFO area of the finance team. So our services are geared around providing outsourced accounting with monthly financial statement preparation, and then helping clients to analyze and understand those financial statements. We will help with anything from sort of internal financials to compilations, if that's a requirement for a bank covenant or a loan or something of that nature. We help with forecasting, budgeting, some of the stuff we're going to talk about today. We also get into some of the more strategic type areas, looking at how can a business make changes and implement those changes financially. What will the outcomes be? Helping clients to review their financials, to understand trends in the business and identify some of the reasons that things are changing on an ongoing basis, and then really take that information and help them apply it to their business.
It sounds like we've got the right people in the room here. Thank you both I am excited to dig in here. So today we'll have 4 sections plus a final Q&A. And we'll start talking about the difference between budgeting and forecasting. We'll talk through the different types of tools that may help or that you may be using. Then we will talk about how to look at the results, right? How to report, how to analyze, how to evaluate what you're seeing. And then finally, we'll talk about the most important aspect of any small business, which is cash flow management. So a packed and hopefully very impactful agenda. To get us started, I will ask everyone to please drop in the chat actually what barriers you might have hit in the past when it comes to budgeting and forecasting, and any topics that you want to make sure we cover today that you want us to keep in mind as we go through. So you can use the little Q&A box at the bottom of your screen here, and we'll give you a minute to submit those.
I think to make sure that we're really addressing the aspects of these topics that are most relevant to all of you, we welcome questions as we kind of go through the presentation. If there's something that really kind of catches your ear or that you've dealt with before, happy to kind of address it in line. And make, I would assume that some of these questions are going to be things that everybody is kind of thinking about as a business owner or someone who's kind of managing that aspect of the business.
Okay, so I'm seeing some notes here about how do I predict my growth? How should I predict some of the other expenses, especially if I have a big change coming up? And just general, like, what are some best practices and tips to keep in mind as we go through? So I think we'll be able to cover all of those. And like Lyle said, please keep the questions coming. Please let us know if you've got an ad or something you want us to dig into, and I'll keep track of those as we go. So, with that, Lyle, I will pass it over to you.
Right. Thank you very much, Jess. So starting with kind of the differences between budgets and forecasts and really understanding what each of these tools are. A budget really helps us to set goals as a business or a business owner. It's something that we view as fairly rigid. So we don't want to be changing the budget after we set it. And that's really where the forecast comes in. But the budget is sort of something we put together with the idea that this is where we are going. This is our kind of our target, and something that we're going to gauge our performance against as we go along through the year. So for purposes of our presentation today, let's think of a budget in general as being something that is going to run from January to December on a monthly basis, that we're going to measure our progress against when we have actual financial results through those 12 months of the year. Obviously, if you have a different year end for your business, you can shift that schedule. But in general, it's going to be a 12-month budget it's going to be budget by month for a 12-month period. And it's going to allow us to really answer that question, how are we doing compared to the goals that we set? So if, for example, I think we're going to hit $2 million in sales this year, and maybe my business is a little bit seasonal, I have say I'm in the hospitality realm and I have higher sales in the summer and the winter, especially in Colorado when folks are visiting the mountains to ski or to get out and hike. And then we'll see probably some dips during mud season in, April, May, or September, October. So we would put together our sales to kind of fit in those categories and then measure against those as we go through the year to see how we're doing. So the budget really shows us these are our expected results. It's where we think we're going to be based on the information we have today. And we'll get into how you put that together in a few slides here. The forecast, on the other hand, is really saying, okay, we set this budget, and most of the time, I kind of view the budget and the forecast as complementary tools. You can use them individually, but the forecast is best with a budget set at the beginning, because it allows you to kind of adjust on that budget where you think you're going. So the forecast is a living document. It's more flexible. It's not rigid. It's not something that we don't touch. In fact, it's something that we want to update continually so that we can really monitor, where is our trajectory taking us? Are we on track for budget? Are we going to miss it? If so, what are the drivers of that? It is mostly, it's forward looking. With our budget, we kind of set it and then we will look backwards and compare against it. With the forecast, we're going to be looking forward. Here's where we are. So we're not really as concerned with what happened in the past, but we're saying, here's where we are today. Here's where we think we're going to go. Maybe we're in the middle of June and our sales have not materialized the way we thought they were in that example with the $2 million of sales for a hospitality company. If we're behind, we really need to start asking questions of our operations team. How are we going to drive more business during, August, September, October, when folks are back in school, maybe not traveling as much? What are we going to do to kind of recoup the lost ground against our budget so that we can still hit our goals at the end of the year? So let's go into kind of what is the purpose of the budget a little deeper here. So with the budget, this is something that as a business owner, when we're putting this together, we really want it to guide our decision making. We want it to be something that we look to and say, okay, if we have a goal of $2 million, what sort of marketing campaigns do we need to run to get people in the door? How do we need to price our, maybe our hotel rooms? How do we need to price our activities for outdoors? Do we need to raise it, lower it? What are others in the industry doing? And kind of taking all these data points and bringing them together so that we can get an idea of where we think our business should be. And then we're going to measure against our performance against where we thought we could be. So this monitoring concept, we want to continuously update the forecast, but we want to continuously monitor against budget to see if there are any gaps, anything that's happening. I think for most of us, from a personal perspective, we can kind of think about a budget as something with maybe our monthly expenses, right? We go through a few months and we say, wow, my cash is really low in my bank account. Why is that? And we look back and say, oh, well, I was eating out every day at lunch. And the budget allows you, comparing to the budget allows you to identify where those gaps are, where maybe a small expense that doesn't seem like a big problem at the time. Maybe it's just slightly over budget. And we think, well, we're under budget in another category, it's not a problem. But over time, if our budget was accurate, we fill up those budget categories with our actual spend, and a little bit over in a certain category can end up being a big problem later in the year. So this really helps us to identify where are those areas and how can we lock those down. As a communication tool, this really helps us to talk with our operations team. So the purpose of a budget goes beyond just measuring where we're at versus where we thought we were going to be. It helps the finance side of the house have conversations with the operations side of the house. So we are able to kind of explain, okay, I understand that you wanted to offer this new activity, but we didn't budget for buying electric bikes, like 100 of them. We really need to understand where that money is going to come from and how we're going to price it, because that was not part of the budget when we put this together in January. Seems like a good idea. It's very popular. There's a lot of other businesses doing it, but we need to have that, in our budget and understand where is that cash going to come from. So reviewing kind of helps to highlight those things, and it will help to have conversations with the operations team where they aren't probably thinking from a budgetary perspective every day. They're getting up and solving business problems from a practical perspective. So this brings the two sides of the business together when we talk about it. So let's look at kind of the types of budgets, because I think this highlights how we can use this as a communication tool. So most of the time, as in the personal example, I think the income statement budget is kind of the common thought. Here, let's understand what our sales are, and let's understand what the costs of doing business are. So if we are, running a bike shop, for example, we've got to maintain the bikes. We've got to have somebody running the counter when people check in. We have payroll for the sales staff. We have rent for the building that we're in. We've got insurance, obviously, all of these components. And we want to understand what do we think those expenses are going to come in at, so that we can ensure that our sales cover them, so that we're running with a net positive budget. Capital budgets, this goes back to maybe we need to buy a bunch of e-bikes. What are the expenditures that we're going to have that might not show up on our income statement because we're going to put them on our balance sheet, right? So if you buy 100 bikes, you would put that on your balance sheet as a fixed asset that you would use and depreciate. Same with maybe a company vehicle, right? If you need to go out, have something that you can go out and service bikes if they have a problem on the trail, you would buy that truck and keep that on the balance sheet. But you need to know that it's going to come out of the cash budget. So simply doing the income statement is probably not going to give you the full picture that you need in order to manage the business. Then we get down to something like a job or a project budget. This is where a lot of the communication can come in, because maybe you've got folks on the team who are focused on different aspects of the business. Hey, I'm really working on getting folks out onto trails, showing them new areas. Maybe you have a guide service, right? And they aren't thinking about the impact of their activities on the overall budget. They're just out there trying to make sure that your customers are enjoying their time on the trail. So having a budget and saying, okay, well, when you take them out, you can maybe take them to a certain part of the trail. Maybe there's a fee associated with that. Maybe you need to budget to have lunches provided for your clients. How does that all play into your overall budget? And then having regular conversations to say, hey, we noticed that you spent a lot more on lunches in July. Why was that? Maybe they come back and say, well, we had 2 times the number of clients that we budgeted for. And hopefully you would see the reflective sales for that as well that would cover those additional costs. Cash flow budget. So this gets a little nuanced. A lot of times from a business perspective, we're thinking in terms of cash. So maybe our income statement is on a cash basis. We are only recording things when we have cash go out the door or cash come in the door. And we really want to understand, in a given month, maybe we're going to have $10,000 of sales, but it's going to happen in the back half of the month. Maybe June, for example, some folks are still in school. They're not traveling in early June. Our sales are really going to ramp up in the second half of the month, but we need to staff our business in the first half of the month and make sure that we can meet payroll. So we need to understand when cash is going in and when cash is going out. This will lead more into what we talk about in the cash forecasting part of our presentation, but timing becomes really key. Whereas an overall budget, as long as our bottom line is positive, we're in good shape. But when you break it down, you need to understand when things are coming in the door and when they're going out the door. And then over on the right side of the screen, the balance sheet. Oftentimes, we rarely see balance sheet budgets in practice. And Rebecca, if you have input there, feel free to chime in. But I rarely see clients budgeting for a balance sheet, aside from capital expenditures, which is really more of a cash consideration. It does tend to blend those cash and non-cash items. What we see more often is maybe digging into AR and AP and saying, how can we get our collection cycle sped up so that we can get cash in the door? And then how can we slow down our cash disbursement cycle so that we can keep cash in our bank account longer where it can work for us? So there can be some considerations there. Going forward to developing budgets and forecasts. So we talked about the types, we talked about the purpose of a budget, we talked about the purpose of a forecast, and I'll get more into that here as we start to layer that on. But the objective is key. So maybe for a new business, we want to understand, or we want to plan for growth, right? We want to grow this business, we want to make it sustainable, so that we are not having to put capital into it every year to make it run. We want it to generate cash so that we can run the business on its own. Maybe we have a mature business and we just want to budget so that we can have a consistent business year over year, maybe with a moderate growth factor that allows us to kind of have the maybe it's a lifestyle business or something like that. We really want it to be steady state. Maybe we're considering an expansion. What is it going to take for us to open a new location, to move into a new market, et cetera? We need to hire new folks to manage that market, to sell into that market. We need new facilities, et cetera. Or there's containment. And we don't spend a lot of time on this with clients, but there's an element of it in every budget, which is, okay, recognize that we have to have insurance, but who's our broker? How are we going back and reviewing that? Are we okay with 10% raises every year? Are we really asking the question, how can you help us get a better rate? What are you really doing for us? How is this, helping my business rather than just becoming a money pit? Choosing the type. So again, most of the time our clients are going to have an income statement type budget, and that's the one that I'm going to use for our cash or our forecast example here as well. But for a business that's capital intensive, we may have a capital budget in addition to the income statement budget, because both of those pieces are going to flow into the cash forecast considerations. And then project, this is probably, if you have an income statement budget, thinking about it as multiple business lines. Maybe you have your hotel, but as part of your hotel, you have a restaurant, you have activities, and then you have your rooms, your kind of core hotel activities. So you'd have a project budget for each one of those divisions where, the hotel manager has their budget, the activity manager has their budget, the restaurant manager has their budget, and they all contribute and roll up to that income statement budget. So oftentimes that's how we see that play out in reality. And then creating a basis. So putting together a budget, this is a huge question that comes up with clients. How do I start? Where do I start? Maybe I've run a business on my bank, just using my bank balance to manage it for a few years. How do I create a budget? In that case, oftentimes you can go back to your bank statements or to your bookkeeping and look at, what did you do last year? Was it a typical year, right? We're post-COVID a few years now, so I'd say you can probably look at the results from 2022, maybe 2023, 2024 now, looking ahead to 2025 and put together a pretty realistic budget based on what actually happens in your business. So that would be kind of that review prior year. You could annualize historical actuals and just say, okay, well, we had maybe a dip in business because we opened a new location. Let's erase that and just straight line everything, assuming that it would continue as the first 6 months of the year had. So we can kind of look at different scenarios and take historical data to build that base.
And I'm getting a question here, actually. So I know this is the case for a lot of our clients as well, but a lot of them have a seasonal business, right? Or something that fluctuates quite a bit, very project based. How would you suggest that those kinds of companies think about forecasting? How do you get as accurate as possible if they have kind of unpredictable revenue and cost streams?
It's a great question. So I think one of the keys there is really understanding what are your monthly cash outflows. Typically, those are more predictable than the inflows, unless you have a very contract-based labor pool. But if you have salaried employees and insurance, rent, et cetera, it's going to be pretty standard. So you can get an idea of what you're going to need to spend on a monthly basis. And then you want to look at the revenue and probably take a best guess. So like the hospitality example, summer and winter are probably going to be big. It's probably going to be lower in the spring and fall times when school is back in session, et cetera. And maybe you want to say, okay, well, we want to have a cash reserve built up for those periods of time so that we can make it through and cover our costs. So it really is kind of looking at it, and maybe you apply a factor on it, right? Like seasonality, we're going to be at 25% of where our full revenue stream is in the middle of the summer or the middle of the winter, et cetera. So kind of taking those things into account.
So this plays into the forecasting too, for you from a seasonal business, you can look at your historical, if you have that, to sort of say, so don't look at the dollars so much, but maybe looking at a percentage and saying, our sales, our activity last year increased 30% in these 3 months, whatever that seasonality is for your business. But the other piece with the forecasting aspect and trying to plan ahead and forward looking and anticipating those busier times is potentially what additional resources do I need? If you're a service-based business and you are going to have a busier season of service, well, you need to hire more people. And that's maybe temporary hourly people who just come on seasonally and then they fall off. And so you start to blend together operations with finance and really trying to look at not just, what the numbers are, but what does the business need to achieve that, to accomplish that, to serve that, to meet that busy season or seasonal demand. And then how does that change in the rest of the year? And to Lyle's point, also then, kind of planning for those lulls, that if you constantly have staff turning over, that's costly too. So what does a recurring base of staff look like? And how do you maintain that staff? And that can get into a whole bunch of stuff for Obsidian to help you with as well, just in line of how do you attract and retain the right talent given your type of business. And so all of these things mix together. And so try not to stay in a box, try to get outside that box and start to think about how all those pieces connect together, because that's how you get a rich budget. That's how you get a rich forecast. That's how these things can be useful tools to help drive action, change, momentum, just other impacts for the business.
Right. Those are great points. Along those lines, as we get into kind of the forecast piece of this, I think that this will kind of bring some of that reporting together. I'm sorry, some of the functionality together. So from a budget perspective, we set our budget. Maybe we have those seasonality or whatever the trend is that is applicable to your business built in. And then as we go along, we look at actuals. So the way that we typically would set up kind of a basic forecast in Excel would be to have, maybe we have our 6 months, January through June, of actual financial results on an income statement or a P&L basis. Then we have 6 months with the rest of our budget, right? So we have actuals, then we have budget. But the forecast means that we are going to actually change numbers in July, August, September, October, November, based on where we think things are going to go. So for example, maybe there's a new, maybe there's a big concert or a big conference coming to town, and you're expecting a lot of influx of customers. So maybe you say, well, that's happening in October. I'm actually going to bump my sales in October up because I think they're going to be higher. However, I'm also going to need to staff my establishment with more employees at that time to serve my customers. So you're going to adjust your salaries up for that period of time. Maybe you find out that there's a refund. You go through a workers' comp audit and you get a refund. You're going to put that into the budget and say, well, my cost is actually going to go down in November. Whatever those shifts are, and I think a couple of them, there's one right there, market trends, right? What is the market doing? Are folks still interested in this? Is it getting really, really popular? Is Taylor Swift coming to town? Our sales are probably going to go through the roof. Whatever that is that's happening in the market that's going to be impactful for the business, we're actually going to change those numbers in the months that have not yet happened, because it's going to show us this is where we think we're going to go. We had our budget, but this is what we think is actually going to happen. And then you take all 12 months and you compare that to your original full year budget to say, are we going to end up over or under budget, and why? And that's where the conversation starts to happen. That's where some of those strategic components of managing a business come into play. You say, okay, well, if we're going to have this large sales event or this large customer event, how do we hire the right people so that we take advantage of those people coming in and seeing our product or our hotel and wanting to come back. How do we get repeat customers? How do we capitalize on those opportunities? So these are ways that we can use the tools to kind of help us to plan around those business events that are going to happen throughout the year. So those what if scenarios, you could put together 2 forecasts. And this is something that we see, especially with cash forecasting, where our clients will kind of split it and say, okay, this is best case. Best case, we have sales at this level. Worst case, maybe that doesn't materialize. How do we need to be ready to tighten our belts to get through if this doesn't occur? And that's kind of the conversation that we want our clients to have through using these tools.
Perfect. And maybe, Jess, if you can just stay back on that slide, and this will kind of segue into, the benefits of these tools. But, as you were talking, as you're looking at these, the other way I like to think about these is that, the known changes and expected impacts, that's the realist mindset, right? Like, this is where we're at. This is what's happening. Good, or, even on the good side, like, hey, we're launching this product. That's where we're at. But that's a good example of maybe where a scenario, which I think is more of the visionary mindset, the scenario, that visionary shifting into, this is our reality now. We've got this product launch, and I think one of those other pieces, and this is where forecasting comes into play, right? So I know we keep talking about it. I don't know when we'll stop, but going back to the pandemic. And looking at some of those pieces, I mean, you could have had the best budget in the world, but nobody could have planned for that and the impacts. And so, along those lines, one of the things where I think a forecast with the known kind of new reality or known changes and impacts of like, oh, this is where we're at, is an example of when the distilleries said, hey, we're going to start making hand sanitizer. We're going to start making this instead, because people can't come out and have a beer, or people can't come out, and have a spirit and do those different pieces. That's just a good example of where I'm sure they had a budget, and then I'm sure reality set in, and they said, how can we shift? How can we change this and maybe forecast differently, and change what we're doing to respond to what's happening in our industry, in our world right now. So looking at how do you forecast? There's kind of 2 mindsets, the reality mindset and the visionary mindset. So when we look at the benefits of the budget versus forecast, Lyle outlined the definition, the differences between the 2. And so the budget is its benefits are that it helps with that financial control, just kind of keeping things contained or having something to measure against, that goal setting. It definitely brings in accountability. We've walked into situations with clients where, they don't have a budget, and we help them create that budget. But then that budget also, it doesn't just include the president, CEO, or the chief operating officer. It also includes other people who have input into the activities. And again, that's tying in the operations to say, hey, when you do something, it has an impact. And you have accountability and responsibility to this budget as a whole. And it helps people connect with the finance, especially if they're not necessarily finance minded, but it helps kind of bring those 2 worlds together, which can kind of operate separately sometimes within a business. So that should be a benefit you're looking to get out of that budget, is that accountability across the organization. And then it can be a North Star in guiding decisions. A lot of times that budget is built off of the past or historical plus a little bit of reality, and where you're at. But along those lines, if you do have a history, and you kind of know how things go, and you can use that history to build that budget, and then use that budget to say, are we trending in the same direction? And if you start to fall off, or if you start to do really well, then that drives that conversation to say what's working or what's not working, and then how do we shift and adapt? But it can help guide those decisions. From a forecast standpoint, again, visionary mindset in a lot of cases, but it's flexible, it's adaptable. It helps you with that strategic planning. It helps you make informed decision making, because they require work. They require regular, and we'll go through that, but they require an investment of time for you to engage with it, connect with it, update it. And as a result, you're getting more real-time information, and you can start to, make better decisions, make informed decisions based on all of those inputs that you're engaging with on a regular basis. Risk management. So it's less about the accountability, but kind of saying, again, those what if, like, what if this happens, good or bad, but what if, and then how do we plan for that? So, what if there's a pandemic? What can we do differently? How can we handle that? And so, so it can help manage some of those risks. And then really just a forecast is focused on, being a compass that you can go in different directions. Which direction are you going? Which direction do you want to go? And kind of those different scenario, you'll hear that a lot in forecasting, is coming up with scenarios, and how do you come up with those scenarios, and how do you analyze those? So we'll talk a little bit more about that as well, in kind of some of those examples. So for the reporting and analysis, this is where I was talking a little bit about. I'm going to do the forecast piece first on this one, but this is where the forecast, you're really in it, maybe weekly, monthly, continuously, especially if you're really wanting to work a forecast into reality. So if you're not just kind of like, what if, I just want to play around, have some ideas, but if you're really wanting to work a forecast from that visionary into reality, then it's something that you're really working in, like I said. Whereas the budget, you'll create it, you'll get it approved. You may look at that. We encourage you to look at that monthly compared to actuals. But a month, especially if you get into January, how telling is 1 month of January? So that's where you're looking at it monthly. But then January might be great, February was not so great, March is better. Let's look at that on a quarterly basis. How are we doing at the quarter compared to last year, compared to budget? So kind of changing and adapting that time frame as you go throughout the year, just to see how things are going. For the budget, always helpful to look at that detailed comparison, like I was just mentioning. With the forecast, it's looking at those forecasts and comparing that to budget and to actual, and sort of saying, here's where we're trending, here's where we're going, and how does that compare to where we thought we would be? Or if we make this change, where might we end up? And being able to have those conversations, look at that even at different points in time, and say, hey, this forecast is panning out, or we're trending in the direction that we thought we might go. Just a couple other pieces on here with regards to the adherence to plan, dynamic forward-looking plan. I think, again, that plays into sort of that rigid, flexible piece that Lyle mentioned at the beginning. And then with a budget, again, the budget's really going to identify those variances and gaps for you. But a lot of times it's just, it already happened. So we can't go back and change that. So we want to look at what are those leading indicators? How can we make changes going forward to affect results in the future? So that's really where the forecast comes into play. And some of the benefits you realize from that reporting and analysis. Okay, so presenting the budget and forecast. So this can be a challenge, and that's kind of the piece with this, and it's a different mindset. If you're in accounting and finance, the mindset might be, I have a job to do. I just have to make sure that things are running smoothly, that I'm closing the month, that I'm producing financial statements, and that may just be like all consuming. But if you're the owner of the business, you want to know, you want information, you want to be able to make decisions, you want to engage with that accounting and finance team to drive momentum and results, and to drive progress, or whatever again those identified goals were for your business. And so it's really important that you put on that different hat from time to time to focus on the budget and forecast. They won't happen on their own. So they do require work. And so A lot of times it is, how do I even start? And a lot of times it's also, I think people can get a grasp of a budget. You do it personally, maybe even for your own personal life. They kind of make a little bit more sense. But I will say that visionary mindset for a forecast can be hard to get into. You got to spend a little bit of time being creative or understanding what's happening in the world or thinking about the business and where it wants to go. And so when you think about these pieces and presenting a budget or a forecast, it's really important to start with that objective in mind. And so what is the overall purpose of this budget or forecast? And when we talked about containment or growth, expansion, those different items, the more that you can be in touch with why am I doing this? What is the purpose of it? The better you can communicate that to others and get others engaged with it. Otherwise, it's just not that valuable of a document because, or tool, because other people can't engage with it at the same level. So if as you're developing your budget this year, you're like, I'm just doing a budget because I have to do a budget, I would encourage you to pause and say, what's the purpose of this budget? What benefits do I want to realize as a result of this budget? What are we budgeting for? And try to articulate that, because that will help you when talking, if you're talking with the president or CEO, if you're talking with others on the finance team, or if you're talking with people who are part of operations or sales, they will be able to follow you and engage with it more. So that would be my first piece of just how are you presenting this? Because then when you're reporting on the budget versus actuals, when you're reporting on those forecasts and the analysis you're doing, you can always come back to, this was our intent, this is our purpose, this is where we started. And that's kind of like that cornerstone to all of this. The other piece is to highlight the specifics. And so a forecast is built upon variables. It's built upon assumptions. It's built around ideas that if we want to grow 10%, we need to hire 5 more people. That there's other pieces that play into that. And so you need to highlight those specifics for the people who you're communicating this to, whether it's the board and again, operations or the CEO, so that they can understand these are the significant changes. These are the inputs that we are contemplating. These are the scenarios. This is the 20% growth scenario. This is the flat scenario. This is the 10% attrition scenario, that you're able to articulate that so that when somebody's looking at it, they can understand what that is. I just did a budget last night for a client of mine. We have some real questions on some really big dollars coming in, but we've got to make payroll. Their programming is starting now for it's an organization that provides before and after school care for students. And so we're starting, the school year is in full effect. So programming is running just at a high level. But from that standpoint, we can't do that programming. We can't provide those services to those kids without some dollars coming in. So from that standpoint, we have to look at that and say, when are those dollars going to come in? Where do we need to, manage that? But then also, what can we look at all the good we can do once that funding comes in? And so, or where can we get other funding, to even do more, to impact more schools? But if that's the case, then we need more people to be at those schools. And so that's where, again, thinking through all those scenarios, it's not just, hey, we want to grow 20% or we want to serve all these other people, but what does it take to do that? So the more you can define and highlight those specifics, those variables, that basis for your assumptions, explaining the methodology and where you're coming from and how you're crafting those scenarios, the more success you'll have for yourself in understanding that forecast, but also, again, bringing people along the way with you.
One other area the forecast can be really helpful is from a kind of a tax planning perspective, right? Like, where do we think our income is going to be? Do we think we're going to be taxable? Having a conversation with your tax accountant to plan for that. Do we need to start setting aside cash for taxes, and after those are filed, et cetera?
Click to the next. So how do I monitor and analyze the budget and forecast? So, reviewing budgets prior to major expenditures. This is where you're using it as a tool. You created the budget. What did you put into that budget? Does this expense fit into that budget? Was it contemplated or not? Even if it wasn't, totally okay, but it's just a matter of then saying, okay, well, now we are contemplating this. That's the reality mindset. We have to bring that in. How does that impact other things as we go forward? So one of the things we were talking about with monitoring and analyzing, that even, the most simple forecast you can do is, where are we going to end up? Where do we think we're going to end up at the end of the year? And that might be, you start with your budget that you had, and you're 6 months in and you're like, man, it's just, things have been so slow, or things have been so busy, whatever the case may be. You can look at those 6 months of actuals, simple as possible, and in some tools you can run a report that will show this, or you can export that information to Excel, but is then adding in, here's what we budgeted for the last 6 months. So actuals plus budget equals, so if we hit budget, here's where we're going to be. We do that with a client of mine that, they're, in this particular year, they are outperforming their budget. And so we've done two things. One, we said, if you've been outperforming, if you perform just at budget, here's where you're going to end up at the end of the year. We also did one, if you continue to outperform budget for the rest of the year, here's where you're going to perform. And we're just taking that first 6 months, 8 months of the year, annualizing that, and then just saying that's the new, that's just where you're at for this year. And so we're giving them an insight into, here's where your budget said you were going to be, but if you keep trending this way, here's where we think you're going to be. And giving them a couple of those scenarios, because one of those is like, maybe we have to scale back a little bit. And one of those is like, well, what if we don't, and we just keep crushing it? It gives the organization some opportunity to look at things and then maybe plan for what they want to do next year, because things really took hold and they're really seeing a lot of growth in their business. Reviewing actuals compared to budget. So annualizing significant variances, and again, running new scenarios. So if something from an actual standpoint is running higher or lower than you budgeted, you can run some new scenarios, even just for a line item. For example, like your payroll, maybe payroll costs. Hey, we had to hire this really experienced person who's going to be great for our business down the line. We don't maybe have that growth right now, but they're going to help fuel that growth in the future. It's that's a two-part thing of saying, for our current year budget, we're going to contemplate now that additional salary cost, which we hadn't maybe anticipated before. We're going to build that in. It's maybe going to demonstrate that we are behind our budget for this year. But then when we start forecasting for next year and saying, well, this person is going to be up to speed by the end of the year, and we're going to start to realize the benefits of their contributions to our team. So then we anticipate we're going to see 10% increase in sales, next year. And you can start to look at those different pieces. But again, it's being really crystal clear on what are those variables, what are the pieces that fit together, and the if then. If we hire this person, then. If we make that capital improvement, then, and looking at those pieces. And then just periodically reviewing the validity of those assumptions. Are they still accurate? Do they need to be adjusted? And playing with those pieces. So then on the cash flow management, I think we've talked a little bit about those pieces as it relates to the budget, to the forecast. We saw a lot of this come out, a lot more clients wanting a tool, wanting ways to look at cash flow management in that pandemic timeframe of, hey, where are we going to be, and trying to plan that out. So jumping kind of down to the bottom, one of the things that we just always have at the ready is a 13-week cash flow tool. And so it can be as simple as putting that into Excel and building that out. And we do that 13-week because we do it on a weekly basis for a couple of reasons. It makes it a little bit more flexible and dynamic for us when working with our clients or even in a business, because it contemplates, different payroll cycles depending on how frequently you're paying your employees. Your payable cycle, if you're looking, if you pay your bills weekly, then that's helpful to see as opposed to just truncating it all into, a 2-week or a month. But so we try to go out, that's going to be like that 3-ish, months for the 13 weeks. And, the Excel is a little bit more manual. We've got some tools we've used. You can definitely do a search for those. One of those that we've used before, it's called Dry Run. You could check it out. It syncs with QuickBooks if you happen to be using QuickBooks, so it can pull in some real-time data and also give you the ability to run some scenarios. So pretty fun tool to use to kind of start to play around with and see how those things work. There's so many tools out there though, so it really is just, would encourage you, use any tool, even if that's Excel, but start to build something out. And again, you have to engage and interact with this. Budgets, forecasts, cash flow management, it obviously won't do it on its own, even though we wish it would just we would just know all the time. But for that cash flow forecast, I I updated for my client yesterday. That was really to give us an idea of what things look like over the next couple months, at least for them. So the importance of the cash flow management, if you're not doing it, is liquidity. So you got to have cash to drive the business. People say cash is king, cash is queen. So along those lines, I think looking at those pieces and understanding its importance to the liquidity of the business, and that it too has to contemplate operations, debt, shareholders, investors, all those different pieces have to come together as part of that liquidity solution. So it's looking at all those different levers you can pull to say, do I have a line I can draw on? Do I have shareholders that we can extend more equity to? What do those things look like? And then also, how is operations doing? Success and sustainability of a business. If you're not managing your cash well, then your business may not succeed. And so, I think those good habits leading to that success, that sustainability, and not just relying on what's in my cash account, but really, again, engaging with it. And then growth. So good cash flow management habits can allow businesses to invest, expand. You know where you're at. You can plan for expenditures, and hopefully make those expenditures when you want to, not when you have to or when a catastrophic event happens. But you can also cash flow plan for that. If this customer doesn't pay us or we don't get this big contract, what does that mean and how can we hedge that? How can we get in front of that? So again, it can be a really active tool to help you make decisions and anticipate what's coming in the future. Couple key strategies. This is going to get a little accounting nerdy and I won't spend too much time on it, but receivables management, make sure you're following up with your customers. Make sure that they are paying you timely. Have a receivables management plan in place to follow up and collect and to get cash in the door. It's a lot better to use your customers' cash to finance operations and growth where you can than to rely on debt. But sometimes, depending on your business, you might have to do that. The other big piece is payables terms. I think not just taking advantage of the discount. Vendors do that because they want you to pay earlier, right? They want your cash because you're their customer. So along those lines, kind of managing and playing with that, what we call cash gap, which is in its simplest terms, how quickly are you receiving cash from your customers and how quickly or slowly are you paying your vendors? Just means you get to keep that cash longer, and that can help with those cash flow management levers that you can pull. And then again, tools and techniques. Use a tool, that 13-week, create actionable tasks to improve cash flow, following up with vendors, getting a line of credit, whatever those things might be. And then Lyle mentioned it as well, establishing a reserve. Sometimes at the simplest, I try to tell my clients, maintain 3 months of operating expenses in your cash account. If you're really risk adverse, maybe that's a higher number. If you're really not, then maybe that's a lower number. But I think having something in mind to say, hey, if we're kind of getting outside of this range, I'm going to start to worry a little bit. And then, hey, how can I change that and get back up to that comfort zone where we need to be able to feel like we can manage our current obligations. And so I think, you know, to wrap up here, we've got just a few minutes left. If you have any final questions, we'd love to address those. But I think with the budget, with the forecast, with the cash flow, the definition, get a clear definition on the distinction between your budget, your forecast, and what its purpose is. For tools, choose a budgeting and forecasting tool that meets your need. I know I talked about that 13-week cash flow in Excel, maybe dry run for a tool that could integrate with systems. QuickBooks has some forecasting capabilities in it. A lot of it's based on historical information, plus maybe a little bit on the scenarios. There's another dashboard reporting tool that we use called Fathom that also has some forecasting, where again, you can create those scenarios and see what those look like. And even like I said, Dry Run has those scenarios. So I think anything that can connect with your system is already built into it, where you can at least start with your budget and then adjust some variables and see what happens. That's a great place to start. And if it ends up being in Excel, you just export your financials into Excel, put a modifier on it, and put your reason for the modifier. That is a great place to start to, again, play with it, engage with it, especially if it's new to you. It will become more familiar, and I'm going to even jump out to say it might even become fun. So, so those are some tools. And then monitoring, if you've spent all this time creating these tools, use them. Monitor it against your actuals. Look at what's happening. Do that regular reporting and analysis, and also communication back to people who engage and interact with that. You know, that's that accountability piece. If people can see, oh, my action had this impact, positive or negative, then that helps them understand it a little bit more, understands it better, and it doesn't just become, it's an accounting thing. I don't know what it is. I don't get to touch it. But it's really a tool for the business. So the more people who can understand it and engage with it in a meaningful way, it can really have a lot of long-term benefits for your organization.
All right. Well, thank you, Rebecca and Lyle. It's been an incredible hour. I want to open up the chat to any questions that people might have, anything that we can answer before we've got just kind of one final message here. What can we help anyone with? Keep everyone excited. Right. Okay. Well, we've got a quiet group. So I just want to share one final message. You know, clearly budgeting is a really critical part of running your business. And it's really important to have a partner who can help you think strategically and figure out all of these unknowns, how to plan for growth, and to be a resource for all of the individual questions you might have. So the CPA is an incredible resource for any business, and I will make a quick plug for a PEO as well. I know our team works really closely with our clients and their CPAs to help with the people side, which is often the biggest cost for any client. And so if you need help figuring out how, you know, new compliance might impact your business, or how competitive your compensation is, how you might need to adjust that for the next year, anything around the people side, which is, like I said, the majority of a budget in most cases, how to save money on benefits or workers' comp or any of these different things, a really strong HR partner is invaluable in that. So I encourage you to reach out to your HR partner. If you have any questions at all, please reach out to us. Tax laws are changing constantly, labor laws are changing constantly. And so having good partners is really important. And actually, if we can flip to the next slide, I will share all of our contact information. Please feel free to reach out to Obsidian, to Rebecca, to Lyle. We're always happy to help, and would love to chat through any of this in your specific business with you. So please do not be shy. Thank you so much to everyone for attending. Hopefully you learned a ton and are excited and feeling really confident going into your 2025 planning. So thank you all again, and hope to see you on another webinar soon. Thanks, everyone.